Hello, my name is Derek Carter. I'm a member of Savant's investment research team, and I'm here to provide a review of the markets for the second quarter of 2017. The second quarter was positive for stocks around the globe, but emerging market stocks rallied the strongest. Both U.S. bonds and international bonds managed positive returns this quarter. Commodities and managed futures both experienced a setback, but global real estate and reinsurance led alternatives with modest gains. The U.S. unemployment rate dropped slightly to 4.4% from 4.5% in the first quarter. Inflation drifted lower to a year-over-year rate of 1.9% in the latest update. The first quarter GDP growth rate came in at 1.4%, down from 2.1% in the fourth quarter of last year. The 10-year U.S. Treasury yield ended the quarter at 2.3%, down slightly from 2.4% at the start of the quarter. A mostly flat April saw markets shake off Venezuelan political upheaval to surge upward late in the month, riding Eurozone confidence. In May, markets rode continued Japanese growth and low U.S. unemployment rates upward. In June, markets flattened. Commodities continued to be subdued by the U.S. crude oil bear market. However, all told, global stocks experienced their best first half in several years. U.S. stocks continued to post positive returns, with the S&P 500 gaining 3.1% during the quarter. U.S. large value tagged along, gaining 2.1%. U.S. small stocks tried to keep pace with the S&P 500, gaining 2.5%, but U.S. small value stocks just managed a positive return. Focusing on the last 1 and 5 year periods, we can note that across all asset classes, U.S. stocks have produced exceptional returns. Developed international stocks continued to fare better than U.S. stocks during the second quarter. While the value premium did not prevail this period, international large value and international small value still fared quite well, with returns of 4.8% and 8% respectively. Over the past 5 year period, investors who diversify by including international small stocks in their portfolio have been rewarded with a tremendous premium. Emerging market stocks continued to provide solid returns in the second quarter. Frontier markets nearly kept pace with broader emerging markets over the quarter. Moving on to bonds, inflation-adjusted bonds reversed course from last quarter's positive performance, falling 0.4%. Investment-grade bonds helped drive short and intermediate-term bonds to positive returns as credit spreads provided a cushion against expectations for higher interest rates. International bonds provided modest returns for the quarter, continuing their diversification benefits. Alternative assets had mixed second quarter results. Commodities and managed futures fell by 3% and 3.1% respectively. Meanwhile, global REITs and reinsurance provided positive quarterly returns. Over the past year, reinsurance has led the way with a return of 5.7%, while other alternatives have been inconsistent. Next, let's look at the asset class returns together. The portfolios on this slide illustrate the hypothetical performance of different global stock-bond mixes of indexes. As shown on the bottom left corner, the hypothetical investor with 100% stocks would have fared the best during the past quarter with a 4.2% return. While larger allocations to stocks have more risk and volatility in the short run, they have higher expected returns over time. The growth of $10,000 chart illustrates this well, as each riskier portfolio has provided a greater return on the initial investment. The blue line shows how all stocks has had the most growth over time, while a mix of stocks and bonds, such as the green or yellow lines, has had growth but with less volatility. Developed international stocks seem to have taken the baton from U.S. stocks so far in 2017. However, when you look at the broader list of asset classes, most have turned in positive returns in 2017. Diversified investors who have stuck to their plan should have earned favorable returns. Looking back at the past 6 months, notable events, both positive and negative, have taken place. Political changes and evolutions, military tensions and cyber attacks, to rising interest rates. Nevertheless, global stocks continued their march to new highs. Does what's happened so far in 2017 tell us anything about what's in store for the second half of the year? Given the events experienced in the first half of 2017, it wouldn't be unreasonable for an investor to think that stocks would have been volatile and losses were experienced in fixed income due to interest rate increases. Yet stock volatility remained very low, and bonds have generally eked out positive returns. The first half of 2017 has taught investors another lesson in staying disciplined and diversified. That wraps up the second quarter of 2017. Thanks for listening.